Hey everyone, welcome back to your weekly market outlook. This is for the 11th of August, 2025. Let's take a look at the numbers that we have from last week. Definitely want to focus a lot more on the interest rate decision from the Bank of England. And if we take a look at the interest rate decision from the Bank of England, it's not the cut that matters. I think what matters more, it's the voting here, right? So we got 5 voting for a cut and 4 voting for unchanged. Now, if we take a look at the forecast here, the forecast was for 8 cuts instead of 5 cuts. So I think we got less votes for a cut there, and hinting, following the press conference hinted by Bailey, he was basically one that vote for rates to be kept unchanged. So this was obviously a little bit more of a hawkish tone coming off from the Bank of England, obviously citing concerns of tariff Trump as well as geopolitical tensions happening that could actually push, food prices and energy prices up. So this is definitely the concern that they have there, and they're a little bit hesitant in terms of whether or not they want to be doing further rate cuts. Right now, it currently stands at 4%. Right. So that was data from last week. Obviously, this week we want to focus on different data here. Firstly, let's take a look at the RBA interest rate decision here. We're expecting a cut to 3.6%. This is pretty much 100% priced in, and RBA is not really surprising the market or anything like that. They did mention they want to wait for the financial year to end in Australia before making an interest rate decision. So so far that has already happened. Nothing much has changed, though I think they are going to be cutting interest rates by 25 basis points tomorrow. That's going to be on Tuesday. Right. And also for tomorrow, we're going to be focusing on the inflation numbers here. Now, if we take a look at the inflation numbers, the CPI is expected to go from 2.7%, to go from 2.7% to 2.8%, and the core CPI also expected to go up from 2.9% to 3%. So this is basically going to be the main focus for the market this week. I think everyone's just waiting for this inflation number. Because of that weak labor numbers, it's basically the second half of data that's needed to kind of confirm what the FOMC needs to do. However, if the inflation number overshoots, for example, it hits 2.9% or even 3%, then it does put the FOMC in a very difficult situation. It does complicate matters a lot more, because if that's the case, then the FOMC will need to make a decision whether or not to go with the labor market that's kind of not performing really well, or inflation number that's still not cooling off. Okay, so we'll see what happens here. That's going to be on Tuesday. This is obviously going to be a market moving event there. Now, the other numbers that we are going to be focusing on is actually the UK GDP numbers. This is actually going to be on Thursday. Now, if we take a look at the UK GDP numbers, the monthly numbers expected to pick up, but the preliminary quarterly numbers is expected to drop to 0.1%. So I think this is definitely a market moving event for the sterling, most definitely. All right, and then we have the retail sales number coming up from the US, and core retail sales number is expected to drop down from 0.5 to 0.3%, with retail sales also expected to drop from 0.6 to 0.5%. For this month, preliminary UOM sentiment numbers, it's probably not going to create a lot of impacts, unlike what we have been monitoring for in the month of February, March, April, and May. All right. All right, okay, let's move on to the technicals here. A couple of key levels to watch out for, and the first one is obviously going to be where our pivot level is going to be. That's going to be at 65. And also the blue lines that you see there, that's basically the area where we are currently looking at the range the Aussie has been traded in. Now this area here, if we take a look at where it's lining up, it's kind of lining up at where the R2 is going to be, and also very close to where the support 2 is going to be. That is pretty much exactly at 64 cents and 66 cents. So nothing much has changed for the Aussie here. This is still range bound between 64 to 66, and 65 acting as the weekly pivot here. That's basically the midway range. And also if we take a look at the Ichimoku cloud, it is still currently flat for now. Okay, let's move on to the euro. The euro, definitely the resistance trend line here. This is going to be our main focus of where price could actually fail. We are going to tick two levels here. The first one is basically just going to be here. That's where the 1.17 is going to be. 1.1750 is also going to be a tough level to break. But ultimately, around the 1.18 level, that's where the upper end of the order block is going to be. That's where the Euro USD might actually be capped. Now, if it fails around this area here, then we might actually go back down inside the Ichimoku cloud, where price could actually be traded inside the Ichimoku cloud for the month of August. However, if it's able to push beyond 1.18 in one single candle in one day, then it will actually have enough momentum to go higher towards 1.19 and 1.12. Now, support-wise, you guys are probably asking, what's the current trend on this one? The current trend on the euro remains to the upside on condition that price does not break below this 1.14 level. As long as price doesn't break below 1.14 level, then the uptrend is likely going to be intact. Now, the sterling, this one here, if we take a look, without even looking at the numbers here, let me just highlight to you what is the current situation here on the sterling. Now, if we take a look at sterling here, I'm going to make this a little bit wider. What you're looking at is the market has been creating a lower high, and it has been creating a lower low. Now, so far, it's currently stuck at the Ichimoku cloud. Now, price could actually fail here. Now, if we take a look at where the order block is currently capping market, that's basically the size of the Ichimoku cloud. That's between 1.35 1.36. Any failures here means that the sterling could actually be pushed back down to 1.32 1.3150 level, and that would maintain the current structure that we have here in the market for the sterling to move to the downside. So that's something to take note of. Now, because of that, we're going to be focusing on 1.35 up to 1.36. I'm suspecting 1.3550 as the potential for where price could actually fail. So we'll see what happens here. It is a very thick Ichimoku cloud. You can see what how thick it is. Basically throughout the whole week, it's this area here that we need to watch out for. It could actually fail there. The RSI and stochastic is pretty much neutral at this point in time, so no indication of any uptrend so far. So this one here, even though it has been bullish for the past 1.5 weeks, is not a confirmation. It's not really an indication that yes, it's an uptrend, because technically from a structural point of view, this is still being capped, and this still here maintains that lower low and a lower low and a higher low. Lower low and a lower high here on the sterling, which is textbook definition of a downtrend. All right, lastly, we have the Dow Japanese Yen. Dow Japanese Yen, we have a very strong support here. This support trend line is pretty much in line with where the Ichimoku cloud is going to be. We also have a very strong base here at about 147. And so far, price did not close below 147. Even with the bad labor numbers, price actually just managed to hold on to 147. Now, with that in mind, if we take a look at this, there's actually a higher probability that price could actually go out of this current range. So any break above 148, that could actually lead price higher towards 149, where we have a little bit of a resistance here, and all the way back up to 150. But ultimately, I don't think this is actually going to overshoot above 151, at least not for this week. So we'll see what happens here. But yeah, it will take a move above 151 before you're actually going to get before the market is actually triggering a potential for a stronger US dollar. But at this point in time, this is still likely to the upside, but still being capped at 150 and 151 range. All right. So with that, good luck to your trades for this week, and I will see you soon.